Thank you, John, and for the organization, and also for to my World Bank colleagues for setting this, putting this together. And I think that this panel is quite timely, given the ongoing conversations around new technologies and new approaches to payments. So to set up the context, I would like to first give a brief definition of what are digital public infrastructures, and also try to bring to the forefront the relevance that they have in this increasingly digitized economy. So digital public infrastructures are basically the digital rails on which essential and basic services are provided to the whole of society. And we have identified at least 3 types of digital public infrastructures. One is digital payments. Second one is digital ID. And the third one is data exchange. And I mentioned that the discussion is timely because obviously right now there is ongoing discussions on tokenization, artificial intelligence, stable coins. But at the World Bank we see 2 parallel realities in terms of DPIs, and we want to stress that while we see a lot of success in some countries in terms of scaling up this type of systems, Brazil is one of the examples, but we have others in India, Malaysia, and so on. Other countries are still struggling in this journey, and still are unable or do not have sufficient resources or face competition issues, structural issues, connectivity issues in terms of deploying digital public infrastructure. So one question is how new technologies can support these journeys. How can we bring together these new technologies to enhance digital public infrastructure? But maybe more critical questions arise in terms of what is the priority that we should give to the different topics when we think about a modernization of the financial sector. So this is what we want to explore today with our panelists, and we have a stellar group of panelists that have obviously they dominate the theory, but they are actually practitioners in the field, so they can provide us with great inputs and views on this set of issues. Let me introduce them by the order on which they will be presenting the remarks. Start with Rebecca Mann from the Gates Foundation. She's a deputy director working on inclusive financial systems. We have Marcelo Aragão from the Central Bank of Brazil. He's the head of international affairs, working on international payment initiatives. We also have Mr. Jung from the Bank of Korea. He's Director General for Digital Currency Research, and he's exploring CBDC and other technology innovation initiatives in the country. And we have Jennifer Fowler from the Financial Stability Board. She's a member of the Secretariat, and she works on data exchange, but with a strong focus on cross-border payments. So happy to have them all here. And I will start with Rebecca. And the Gates Foundation has been working a lot in the field of digital public infrastructure, and you have been helping countries in many regions to deploy this type of DPIs. And I want to emphasize that we are going to focus on payments. And we want to learn from you and hear you on what are the challenges, what are the steps that, or missteps that countries face when implementing DPIs. So Rebecca, thank you.
Well, first, I want to thank my friends at the World Bank and the Bank of International Settlements for bringing us here and doing such incredible work in this area. And I wanted to start with a story. In the summer of 2015, I was doing some field work for my PhD in India. It was in a city called Galicia, which is in the state of Madhya Pradesh. And I was at a small roadside banking kiosk. I think it was SBI, State Bank of India. And a woman walked in, and she told the agent that she wanted to get the payments that she was entitled to for the government for her child. She put her finger on a little kind of biometric authentication device, where her Aadhaar number, her kind of digital ID, had been linked to a government database probably the week before. And the agent kind of looked in her account, cashed out the money, and gave it to her. And so the full value of her entitlements had moved from the state treasury into her bank account, into her hands in under 48 hours. And it's hard to emphasize what an incredible achievement this is. Rajiv Gandhi in 1985 said that for every rupee the Indian government spends on its citizens, only 15% reach poor people. And in this case, this woman received 100% of it instantly into her hands. And so what amazed me about this wasn't the technology, it was really the trust in the system, and that came from three very intentional design principles. And to go to kind of the challenges and the opportunities for country, we see that systems work best when they are inclusive. That's the first one. So when systems are designed in a way that they are neutral platforms, that they're not, for example, single use case like voting or banking or getting your kind of government payments. And so that tends to avoid segmentation where people who don't get those benefits or are women or are migrants or don't have formal papers get left behind. The second principle, we would emphasize is interoperability, that when systems are built with open standards, preferably open source, they are flexible in a way that closed-loop systems can't be. And that provides kind of flexibility. It allows innovation, both in the public sector, which we're going to hear about from my colleagues here, and also in the private sector. And it avoids kind of problems like vendor lock-in that we've seen in some countries that have gone with kind of proprietary solutions. And then the third is data minimization. And I think this is where some of the biggest missteps can be. Collecting the minimal amount of data and storing it safely is absolutely critical to ensuring public trust. And it's the countries that we have seen leading with this principle rather than adding it as an afterthought are kind of the ones that have the most resilient systems. So those are kind of the three principles I'd emphasize. In terms of missteps, digital ID is a very contentious issue, and for some good reason. And so we would say in any kind of case where a digital ID is used as an instrument of surveillance or oppression or predation by the state, then that is absolutely, rather than a tool of empowerment, that's going to be a problem. The second is where those interoperability properties are sacrificed to proprietary interests, which is something that we do see and we hope can be avoided. And I think the last is where systems are deployed before accountability and governance systems are in place. There's been some very unfortunate instances where government benefits have been linked to ID systems, for example, that were not operating properly or perfectly, and people who were entitled to their benefits, kind of poor people who needed that money, were not able to get it. And that, was catastrophic. And so kind of avoiding those missteps and kind of leading with those principles is where we would start.
Thank you, Rebecca. Marcelo, PIX is a great success, right? And we want you to share with us the secret sauce of this success. Maybe you can walk us through the lessons that you have learned, but also maybe if the Central Bank of Brazil were to go back in time, what would the central bank would do different?
Good afternoon, everybody. First, I would like to thank my colleagues from BIS and World Bank. It's very kind. It's very happy to be here among friends. It's very nice to meet new people and make more friends and so on. And Rebecca made a great introduction for us all, setting the context and telling a story that we can quite relate to. And so let's try not to be too technical and introduce PIX also for the story similar. This tries to answer Guillermo's question. So we have been discussing central bank all sorts of innovations that is happening in the landscape, looking to other countries' experience. We strongly believe that we should be catalysts, we should be humble and learn from others and see other countries' experience and so on. And we are looking at all these sort of technologies, central bank digital currencies, fast payment systems, open finance. We're not responsible too in terms of mandate, but looking digital infrastructures in general. And I'll try not to be prescriptive here. But then we all face a huge, let's say, a generational challenge, which was the pandemic in 2020. At the time, we have some effort committed to a fast payment system. And we decided at that time that it was timely to, let's say, anticipate launch, to put effort on this. So this is a part of, although the moment is very sad, this is personally sad for many of us, it was a stroke of vision and luck, because this was the time that Brazil, and like other countries, was facing this kind of digital transformation. People are very concerned about face-to-face interactions. People are very concerned about, let's say, even using cash. And then goes 2 points. So now, if we just move 4 years, if you walk on the streets in Brazil, and Brazil is a poor country, it's likely that you see a beggar on a traffic light with a QR code of his mobile number. That's the way they collect money now. Cash usage in Brazil, they felt from 70% of all payments to less than 40%. So in a sense, this digital transformation now cannibalized mostly cash usage. And this became an opportunity. The idea from the beginning was to have something abiding more or less the same principles that Rebecca has just introduced it to us. We want something that was open, simple. Inclusion has to do with simplicity, especially it has to come with literacy, but it needs some simplicity. We're not trying to achieve all things on the same goal. It has to be, in a sense, accessible to everybody, but also open to participants. It's not something, and this is one thing about DPIs is this platform model. So we want all the sectors of the society to engage in, providers and consumers in a sense. So I have some numbers here just to contextualize. When we launched it, we have 1.4 million users already record. Now we have 160, which for a country who has 210 million people, 15 million businesses, 900 institutions are capable and they are authorized, regulated, and supervised to provide payment service through PIX. Transactions on the first 4 years of 2021 was around 9 billion in numbers. Now, in 2024, 63, $5 trillion US dollars you have moved on let's say, last year. And our accounts, our forecast now is on this month, on this very month, we surpassed 2024. This is half of all digital payments in Brazil. This is quarter of all payments in Brazil. This is, on our estimated, $25 US dollars added to our GDP. But the most important is we double our indices of financial inclusion, and we also, I mentioned cash usage, cash ownership also raised it. And this was a good opportunity for banks, for new incomers, fintechs, and even for big techs. And it's interesting to see this as a kind of a movement on the digital transformation, because even payments in Brazil, like traditional ones, like credit cards, they grew on the sidelines of PIX. What we have seen experience reductions was first physical cash and some kind of wire transfers that banks used to do. So it's simple. Now everybody has account to account. And do we have, let's say, a secret sauce? I think we have to be humble because we spend so many years thinking about and looking through what other institutions are doing. Pay attention to what hurts our citizens in terms of this. When the government starts some fiscal, let's say, reliefs during the pandemics, some people flocked in the streets, in the bank branches to collect benefits. But this was the least desirable thing to do, was to queue on a bank branch to just get access to some benefit. And that's what, like the first, I think we have to work harder, we have to work over after hours, and we have to make this happen faster. And this was produced, I think, in, I would say, 4 years, we transformed the way people pay, people shop, even the way people communicate. Return back to you.
Thank you so much, Marcelo. So we are kind of getting a sense that common features for successful DPI is designing for inclusivity, right? And now talking about DPIs is I would say is a new term for all systems. Fast payment systems, for example, have been there for a long time. And now I will like to ask Sung-guan. Korea has, I think it was the first payment system that was running on a 24/7 basis, which is very advanced by the 2000s. And then you implemented an open finance, open banking framework, and also provided infrastructure, which is very different from what we see normally with open banking, which there is standards, but not so much support in the infrastructural part. So what are the lessons that you can share with us in this journey? Thank you.
Yeah, thank you for having me here and then giving an opportunity to speak. I think Brazil has a PIX, and then the corresponding, same kind of a system is we have a EBS, electronic banking system, that was introduced 2001. It's quite a long time ago. Actually, as it names implies that it's bank-centric, so only the bank can have access to that payment system. So it's 24/7. It's not RTGS, but this is a DNS, deferred net settlement way there. So, and then started with the banks, and then 1 decade later, and then securities companies, actually, the security broker companies, actually, they started to talking about the fees, because the fees that, and actually when you fund transfer, you have to pay fees, right? Because the securities company, they have customers, the customers actually impose some kind of fees there. So the securities companies are complaining about the fees that is too high, that imposed by the banks, actually. So they started to open up the payment system, EBS. So we have struggled in 2 years, a lot of discussion, and then we ended up, we're going to allow interactive access opportunity given to them. And then that issue is settled. And then 1 decade later, then Fintech companies started up, the big techs. Actually, they're going to amass a lot of AMU, and then transaction volume is going to increase. And then they also started talking about the fees. So that is imposed by the banks. So at the time, actually, because I was a central bank, and actually we really struggled how we going to respond to that, whether we're going to have given access to the payment system, or, I don't know, indirect access policy. I think that there was a lot of discussion, but we ended up having established a new type of a payment system, but this is very designated for fintechs and big techs. So this is a separate payment system. So actually, we started EBS, but we have an open banking system. Well, not is it something like a US, UK's type of open banking system, but it's a very centralized banking system, not a bilateral relationship based on one between the banks and the fintechs, but it's a centralized. There is a one intermediary, central intermediary. They're going to organize the APIs all over them. This is kind of a new type of payment system, actually. So this is a payment system set up for the fintechs. Now, actually, when we look back to that, why? Because there are, I think, there are three possible, I think, policy choices we made to have. Something that, because the fees is too high, then I think the competitiveness and competitive, authority might intervene. And actually, they're going to force them whether the fees is reasonable or not. But competitive authority did not do anything at all. The second thing is that central bank actually have an open mind that. I think the PIC's case that already allowed the big tech and the fintechs have access to the payment system. But at the time, we were very conservative, actually. We didn't open up to that one. That we chose that last one, actually, we created a new payment system. So the payment system actually, FiberPick, it is going to be divided into two systems, actually. So if you'd ask me to that, what would we do if it were the case that, then at this time, actually, I would say that it would be better to have open access to even fintech and fintechs because we can, if they're going to participate in this bigger payment system, I think we're going to create a network effect. That's beneficial to end users because they have one access. Then that's I think something that I'm thinking of that is a good policy. So I think now this is 10 years of the past. Now this is a crypto bank, crypto fintechs. Now it's probably I think it is the case that Federal Reserve also is facing that same dilemma that the fintech banks actually wanted to have a master account with Federal Reserve. So I think that central bank now is facing the same challenge. I think that this is the time that we have to think about.
Thank you. Thank you so much. And Jennifer, you have a global view of particularly with your work on cross-border payments. And when we think at the bank on cross-border payments, we are sometimes concerned about domestic payments being ready for being interlinked with other jurisdictions. You don't want amplification of domestic risk into the international community. So what is the FSB looking in terms of this challenge? Do you see challenges on domestic DPI? Thank you.
No, thank you. Thank you for the chance to be part of the panel. I'm sure some of you are wondering, what does the FSB have to do with any of this, the Financial Stability Board? And the answer is that we're looking at exactly that question, is when you take the domestic infrastructures and try to make them work cross-border, which is really the ultimate goal, what are the issues that arise and what are the issues that arise as it relates to data? And it turns out that data is really central to making those systems work for consumers, for end users. So 5 years ago, the FSB was given the task of coordinating the work under the G20's roadmap for enhancing cross-border payments. I know many of you are familiar with this. It has 4 goals to make payments faster, cheaper, more accessible, more transparent. And so when we started to look at, well, what are the problems that are preventing us from being able to achieve those goals, a central issue that is causing friction in the cross-border payment system is the issue of a misalignment of data frameworks. And I think we're the only people that use this term, data frameworks, but it really relates to the data rules and regulations and standards for how you would share data cross-border. And so what we found is a lot of those frictions are arising from misalignment of different approaches to data privacy across borders, or actual conflict between what is required from an AML CFT perspective and what is required from a data privacy and protective perspective. We found that actually the increase in data localization has a chilling effect on investment in cross-border payment infrastructures and interlinking. So what we have done is create some policy recommendations for how to do this at the international level. What do you need to do as a jurisdiction to try to get the right legal and regulatory framework in place to try to resolve some of these frictions? One of the big things we found in the work that we did is actually something that sounds so simple and yet is so hard, which is we found that actually all of the stakeholders that are involved in solving cross-border data sharing never talk to each other. They never are in the same room speaking with each other. So data privacy and protection folks don't really meet with AML CFT folks. They don't really talk to sanctions compliance people. They don't really engage with payments experts that much. So what we've done is create a forum for all of those stakeholders to meet together. Again, it sounds so simple and yet so difficult. But we've started a forum on cross-border payments data to bring together all those stakeholders, and it's really in its infancy. But the idea is to really have those folks that are implementing these systems domestically to talk to each other about what it looks like in a cross-border way and really focus on practical solutions. So what are the real practical things that you can do when you look at all these different legal and regulatory frameworks that are sometimes in conflict? So that's the approach we're taking, and it's really on the data sharing piece.
Thank you. And now moving a bit to the second part of the panel, when we talk about DPIs, and I mentioned at the beginning, this is a combination of different infrastructures. It's not only payments. It's also data exchange. It's also digital identity. And in the financial services sector, all of this is relevant. There is a huge disconnect between digital ID, authorities, and regulators in the financial sector. So, and yet there is a lot of efficiencies that you can achieve from this type of partnerships. So, Rebecca, what are the views of you and the foundation on these linkages? How can this be achieved? What are the use cases that you see? For example, can these resolve the inclusivity issues or support them? Can these resolve the issues around data privacy? What are your views here? Thank you.
So I think we would say that each of the DPI building blocks have their own utility, but it's when they can be combined that you really get the magic in terms of benefits of inclusion, kind of new digital economy kind of opportunities, cost reductions. But sometimes the building blocks can be a precursor for each other. So for example, we started our work on payments kind of a long time ago, but we realized that, you know, your payment system can only be inclusive as your ID base. And if we're working in a country where, you know, there's a woman who doesn't have a passport, she doesn't have a driver's license, her address is the house under a banana tree, and 6 other families live there, like, that's a problem in terms of onboarding her into the financial service system. And so that's why we started the work around digital ID, to make sure that our work on digital payments, which is our main focus, actually is inclusive. In terms of use cases, kind of to the example I spoke about earlier, you know, it's where, you know, governments can, you know, pay citizens or send them benefits, not just because they can send them money directly into an account, but also because they can authenticate them, they can kind of, you know, make sure that their entitlements are correct. And there's lots of examples of this. Like we saw during the pandemic in India, the fact that they had a digital payment system, but they also were able to kind of uniquely identify citizens, meant that they could send them money much faster than almost, I think, any other country was able to move in terms of pandemic-related kind of income support. Conversely, in countries like the one we're in right now, which doesn't have that kind of base, they had a very robust kind of, you know, pandemic income support kind of program, but there were kind of after the fact large kind of, you know, many reports of, you know, duplicate claims, kind of people who were not entitled to them, and that was because in a situation where like speed and accuracy was of essence, they just weren't able to kind of authenticate, you know, the people who had those entitlements. And so be it kind of paying teachers or paying health workers in remote areas in some of the countries we work, be it, you know, making sure that kind of women and families get the payments they need, also kind of reducing kind of corruption. You know, we saw in Nigeria when they started authenticating civil servants, that many kind of ghost workers were kind of removed from the payrolls, kind of leading to kind of huge savings. So there are so many different use cases of where they can be combined. In terms of the data exchange layer, that's probably like the frontier, and I think there's a lot of exciting opportunities where they can kind of connect. But to my earlier comments about, making sure that the right safeguards are in place and privacy is protected, I think that will be the future in a few years.
Thank you. Thank you very much. Very, very helpful. And maybe, Marcelo, thinking that probably for particularly instant payment systems, fast payment systems, the new frontier could be cross-border payments, right? Particularly in jurisdictions like Brazil that have already somehow resolved the domestic payments infrastructure issue. What is the role of the central banks in terms of facilitating these interlinkages? For example, Rebecca made great points on digital ID and data exchange being kind of prerequisites, for example, to allow a person to have an account, right? If you don't have an appropriate ID, you may have issues accessing payment services. So what can central banks do with DPI and also in coordination with other authorities for this purpose?
Okay, so I'll try to break down your answer in parts and also try to connect with my distinguished colleagues have pointed. The first thing I would like to stress is that, well, I have mentioned that we started discussing PIX way before the launch, but this was not the original plan. The original plan was, in a sense, being the catalyst and force the market to convert to something that was digital, fast, open, and so on. So we tried for several years at the market to come up with a solution comparable to what we've seen in other countries like Korea and so on. But we had this coordination problem, and so we decided to step in. So the role of a public institution, or the central bank in particular, is not really overstep the market or in a sense. But there are moments that you have to go beyond your role of, in a sense, and without departing from your mandate of financial stability, but you see that there's something that is dragging down the economy and you should do more. Well, data is something that is very related to most of the frictions that, in a sense, prevents payments domestically in cross-border and so on. So the systems are closed loop, typically domestic. And that's, in a sense, although I'm not saying that PIX is let's say, is a payment system per se, but every time you transfer value, you also transfer information to some sense. And there are some things that happen domestically that you cannot translate easily. For instance, I mentioned that the banks lost revenues from wire transferred. On the other hand, they get information. So people who go to bank branches and withdraw all the salary on the beginning of the month and only return 30 days after to the next salary, now they pay everything using PIX, and they generate a huge data stream for the banks to offer added value services like credit, insurance, and so on. This guy pays his electricity bill punctually every month and so on, of this value and so on. So he might be more trustworthy for a credit line than other. And that's why credit card rose on the wake of PIX and other services as well. But then things that you can do domestically when you have control of the legal apparatus, not the control, you understand that the legal apparatus is set, is defined, and you take this exogenous. It's something that you cannot really translate. Let's not forget that payments at the end of the day, a finality, is a fulfillment of a legal contract. And then there comes the challenges that, although the domestic DPI arrangements can be quite successful, and with mix of luck and good decisions in terms of that, capturing these network effects cross-border also requires certain things like proper data sharing framework, a proper harmonization of legal and tax standards, because this is something that has to be addressed as well. IML-CFT also is not that homogeneous. Most of the countries subscribe to FATFA recommendations, but there are nuances in the way you implement this. There are nuances in the way you find. All these things has to be taken into account. And to summarize, what we see now is very judiciously, we recognize that the private sector, in terms of cross-border payment, it does a good services and address many of these frictions, but does so selectively. It does for profitable, very profitable corridors. And as the time passes on, the number of profitable corridors is less and less. And that's the thing that may call upon, like we have tried in the past, the market to solve, and then we have to step in to have this more level playing field. Perhaps central banks and other institutions will have to step in the game just because there is this market incompleteness, this market failure. And to finish, in a world that we run the risk of more geo-fragmentation, more split, perhaps market failures will tend to propagate or to disseminate rather than reduce. And so this public digital infrastructure, or at least a more proactive role in terms of forcing, might be a way that we need to resort to countervene also this movement. Yeah, please, back to you.
Thank you. And over to Sung-guan on his views, Korea. Is this on?
Yeah, thank you.
Yeah, to Sung-guan, we want to get your views on. Thank you so much. On the on CBDC, and CBDC normally is very much discussed in isolation, right now. When you think about digital ID number, or at least we haven't heard, like we are going to integrate a digital ID wallet with CBDC. Maybe some jurisdictions does. But in general, this discussion is very much isolated. So would be great to hear your views on how DPI can bring in innovations like CBDC in particular. Thank you.
Yeah, I think that because the current payment system is account-based, right? I think that I believe that the future is that everything is tokenized. I think that here that everybody here, that tokenization, I think. So I believe that the future is a tokenization. I think that then is the question is money. Who's going to tokenize money? I think that stablecoin issues, they say that we're going to tokenize money. But I think but money is actually create. I think the central bank definitely has to say something on tokenization of money. So my bank actually, central bank, we took initiative. We're going to tokenize the money first, and then so we provide. Our job is we thought that we're going to provide like a foundation on top of which that commercial bank can issue money. Okay, tokenize or something like that. So we started with the BIS, and then the concept of unified ledger, where the central bank money, that is a wholesale central bank money actually, that is a tokenized, and then commercial bank money tokenized actually on the same platform actually. So think about it, end user perspective actually. What is the meaning of the tokenized money and the tokenized deposit actually? That is actually converting their deposit into tokenized deposit, I think. So what's the difference between that, what debit credit card? I think it is the same thing because that they're going to download their digital wallet, they're going to put money in it, that is the tokenized deposit. The only difference is that I think it is the programmability. I think that's the difference, I think that. So now now our working on a project that is that we're gonna try to find the use cases of a tokenized deposit. I think that because you hear a lot from the stablecoin issues side that actually, because that tokenized deposit is useless, not useless but much, but actually is compared to the stablecoins not a competitive. But actually, my experience is that because we are teamed up with the Ministry of Finance that. Because the government actually, large portion of the money actually distributed as benefits. Sometimes those money funding some kind of programs, but they can involve a lot of frauds, right? So if the Minister of Finance actually they're going to utilize our system where that tokenized deposit is going to be utilized, then this because it's programmable, that means that certain conditions are going to satisfy that the money is going to be immediately transferred. So this kind of programmability actually really benefited finding frauds and something like that. So that's I think the first benefit that why tokenized deposit is a good thing. The second thing is that because this, I have to explain about the background, the context that Korea, as I said, everybody has credit cards, not debit card. Everybody has a credit card. But you know that a credit card has interchange fees that is 1 or 2, sometimes 3%, right? This is huge money. Think about it, the government distributed money, right? The benefits, other subsidies, and then people pay with those money in a merchant, and the merchant and I have to pay this interchange fees. This is a lot. But if they rely on our system, this is a public infrastructure, right? Then the cost is going to be getting really down. Because we're based on very simple fee structure. So I think that future is the payment system future is to tokenize the payment, right? Tokenize the money. So who is going to provide such a kind of infrastructure? I think that the public sector side should have started. I think that's our initiative started.
Thank you. Thank you. Now moving into new technologies that are outside of the financial sector realm. Jennifer, we know that that right now, for example, there is an increased number of fraud given the digitization of the economy, usage of digital payments, and so on. Still, this seems to be a financial sector issue, but that has expanded with digital platforms, with e-commerce, with other, let's say, attack surfaces. So what is the FSB thinking on this issue, and what is the level of coordination needed for tackling this topic? Thank you.
It's a great question. When I talked about the goals of the roadmap earlier, I should have also said that we want to keep payments safe. So we don't want just them to be faster. We want them to be safe as well. So fraud is really, a huge issue now, and that it jeopardizes that goal, I think. But it goes again back to what I said about domestic versus cross-border. So we see across the landscape so many jurisdictions have done incredible work on anti-fraud domestically. But then the question is, what is happening in the cross-border fraud issue? And that the level of coordination that's required is enormous there. And there's so many, what we found, and we've begun to have conversations about this with the private sector and with various authorities in our member jurisdictions. But what we found is there's just a complete lack of, consolidated or uniform terminology even for what fraud is. There's a complete lack of agreement on what pieces of information are important to be able to detect and mitigate fraud. And all jurisdictions and authorities have the same understanding of what they need. There are questions around when a fraud occurs in one jurisdiction and it's detected in another, who's going to make that, who's legally liable for that, and who makes that consumer whole? So there's just so many different issues, and I think we're continuing to kind of consider what is our role in that. I think there are lots of international organizations that are working on this issue as well. So I think it really remains to be seen where's the right center of gravity to work on that in terms of a cross-border issue.
Thank you, thank you. And with that we close the scripted questions, and I want to ask a final questions to the panel, whoever wants to answer it. But if you would a hypothetical one on if you need, for example, to advise a central bank governor, a minister of finance that comes very excited after the annual meetings on stable coins and all of this, in terms of the journey that the country should follow, and what should be the steps. And thinking on developing economies mainly, which is the reality for the largest part of the population, what would be the advice that you would provide? DPI first, tokenization first? Who wants to take on this one?
He's going to take it.
Okay.
Well, I think not implication for developing world. I think it because that, well, I think it because that we public digital public infrastructure provider actually, but actually we should be also competitive. I think anything cannot be justified because we are public. I mean, public should be the more agile, savvy, tech savvy. I think so. In line of that, thinking that we should be prepared for AI innovation. Agentic AI is definitely going to be rise. So I think because the good thing is the tokenized money. The thing is that because that it can enable micropayment actually, and also that it can provide a kind of functionality on top of which that agentic AI can utilize something that. So I think that there is a Coinbase and Google. They are doing a lot of research. Actually, we have to learn from them. Actually, my research lab actually working on with the private sector. Actually, we're developing X402. Probably never heard that one. This is kind of a protocol that is something that for enable micropayment, and also they combining with the agentic AI. Actually, I think it is. Well, we're going to showcase next year that how can it's going to be utilized for an agentic AI. So what I'm saying is that we should be not, but even the public side actually should be savvy, and then very should be swift to move. That's.
Anyone else that want to share thoughts on this?
I think you should also share.
Well, another thing that is more or less guide our decision making is also that there is no one size fits all. One of the things that was really successful, even if when we decided to step ahead on PIX, and we have a CBDC initiative that's trying to complement this, I mentioned my first answer, there's humility. You have to be humble and have to be adaptable and learn as you go. And I'll go back to this TRAX initiative, because it's a CBDC one. Every time we come up with some tough questions, we just engage the market and we ask them, what's their views? Would you have a PIX forum that since the first discussions about designing the payment system, we enjoy the organizer society, the market players, participants, and all sorts of on. And we keep doing this. When PIX has this unexpected uptake, and we said, do you need a CBDC for retail payments? Perhaps not, but perhaps we are missing something. Let's ask the market. So we invite, and people come up with 49 different use cases, and we select 16 of them and they ask us, which platform do you want us to use? And we said, choose your own. And we have this round of experimentation with the 16 different cases, from microfinance to tokenize real assets to enforce programmability and so on. And then we said, well, again, but we cannot work on the different platforms. So let's try together to come up with something more new. So this is an ongoing story. I not want to emphasize this, but I want to emphasize this aspect of having and taking advantage of sorts of vision and knowledge and experience. You don't know everything. Even if you decide to take a more leading or fostering or catalytic role, you have to be prepared to collaborate and to listen.
Thank you. With that, we end the panel, and thank you for your insights and thanks.
All right, everyone, we now have the last break of the day, so we will come back here at 3:20 sharp for the final panel on quantum. In the meantime, please feel free to mill about and grab something to drink.